Hello and welcome to the weekly CFO Newsletter. Thank you so much for being with me. My name is Sean Allison, and if you haven't heard one of these before, please send me your feedback to support@cashflowoptions.com.au. Let me know if you enjoyed what we're doing, if you would love us to continue to do that, continue to do these newsletters. We had some great feedback recently from many of our watchers and subscribers that really wanted us to continue to do this. So I will certainly do that. But certainly send us your feedback if you can. Again, that email address support@cashflowoptions.com.au. That is our company name, actually, Cashflow Options. So let's get into this. We have seen some pretty big moves in a couple of stocks. We're going to talk about the market in a minute and what I'm actually going to be doing soon, and I'll give you all the details on that in a moment. But a few people asking me about GME and BBBY, and also Beyond Meats or Beyond Meat. These all had very big moves. Now, we were actually running a 2-day workshop for our members just on the weekend, so just a few days ago. And we were specifically talking about these. One of the strategies that we teach is a high short interest strategy. And this is used with call options to make a lot of money when a stock is short squeezed. And one of our coaches was running, Anthony, was running a section of the workshop and was talking specifically about GME and BBBY. So we nailed both of those trades with this strategy. Beyond Meat, we didn't get this one, but we did get GME and BBBY. So that was pretty amazing. But let me give you a bit of an idea about how we find these and why they work so well. Let's have a look at this. So I've sort of shown this before in a previous newsletter, but I won't go too deep into it. But simply put, when someone would like to, I was going to click on Screener here, right? Click on Screener. When someone wants to make money from a stock moving down, one of the things that they can do is short a stock. So they will go to the broker and they'll say, look, I would like to short XYZ stock. What happens is the broker then goes and borrows shares from someone else's account. You then must return those shares as the person that's short selling the shares. You must return those shares back to the broker at some point, and he returns them to where he got them from, where he borrowed them from, right? So the idea being that you, with short selling, you sell first and you buy second. Bit strange, isn't it? So you normally would sell high and buy the stock back lower, return it back to the broker, he returns it back to where he borrowed them from. Whereas with traditional share investing, obviously you normally buy low and sell high. This is the complete opposite: sell high and buy low. So what happens is when these short sellers get a theory, an idea, their analysis tells them that this particular stock's going to go down, and a whole stack of these short sellers all get together and they start shorting this particular stock. And what happens? The stock moves up dramatically. That will cause something called a short squeeze. The only way for you to close out a short position, a short stock position, is to buy to cover, is the technical term. You must buy to cover that stock. And what causes a stock to move higher? Simply people buying it. So it does cause a short squeeze, and then as a result you get moves like this, right? 92% in a day. Okay, so this is a very real strategy and something we've made a lot of money on in the past. But this one here also has a charting pattern here. So this one also has a bull flag. Again, that's an additional edge that we use, okay? And we love bull flags and bear flags. All top traders will use charting patterns, or they should at least. And there's the bull flag there, right? So this was an additional edge for us getting into this position, okay? But how did we find it, firstly? Well, one of the ways, there are a few different screeners that you can use. Now, obviously, FinViz is a free screener. They do have an elite version here that you can pay for, but pretty much everything you need here is free. I think the best free stock screener on the internet. So one particular setup that you could use. First one I would like is a beta over 1. So I want a stock that's going to move as much, if not more, than the market. Okay, in percentage terms here. So if we then look the price, something over 10, typically stocks under 10 can't be shorted. Okay, so this is a squeeze. Sorry, this is a screener looking to set up positions that could be in a short squeeze. In other words, having an explosive move higher. So it's got to be optionable and shortable, because we are option traders, the most powerful investment vehicle on the planet. Another thing you could do is you could look at change from open up, right? You want something that's been moving up where the shorts are under pressure. There's the elite that I was just talking about. Now, another thing obviously that you need is the short float, the percentage of the float of stock that is shorted right now. Over 25% is a lot, right? So you could choose something over 25% and maybe insider transactions being positive, right? And that sort of brought us here to 5. Okay, so we look GME, there it is. Okay, GME and BBBY, right? So that's one way of actually being able to find these stocks that are about to have an explosive move higher. That's certainly one thing that you need, but I also want to have some sort of technical pattern that gives me a edge. Now, both of these, and the reason that we were demonstrating these, is that both of these do have a bull flag, right? So they're breaking out of the bull flag here, okay? Breaking out of the bull flag, and a little bit hard to, there we go, right? Breaking out of a bull flag here, along with high short interest, okay? Entering on this day, stop here. The length of the pole would be your projection as to where you're looking for your target to be, right? So you would then project that forward, and that would be your target. So 35 would be the target in this case, okay? As you enter bull flag, high short interest, breaks out here, you enter, stop here. So stop, your risk level is here, entering here, your target is the length of the pole of the bull flag, which is 35 in this case, which we closed above yesterday. So you'd look to exit that position now, as an example, right? A few people asking me about that. That's one way you can do it. High short interest is very good, and simply used to make money with call options as a stock explodes higher after being squeezed short. So that's definitely one thing that you could do, and I hope you found that useful. I know last time I showed something similar to that, I had a whole range of people sending in emails saying, Sean, thank you so much for showing me that. I've just made huge money on this stock and this stock, and it was fantastic. So anyway, just a quick rundown of that. But really what I want to talk to you about is the market right now. So, futures market pretty flat right now. The big thing that the market is waiting on is the Federal Reserve meeting. Okay, now we know that that's going to announce, or the Federal Reserve announcement will be at 2 p.m. and the press conference will be at 2:30 p.m. New York Eastern Time. Okay, about an hour and a half before the market closes. So a lot of traders are sitting on the sidelines right now waiting for that to happen. One of the things that we use at Cashflow Options to determine whether the market is likely to move up or down, and whether it's in bullish or bearish mode, is the opening range. Now, the opening range is over 90% accurate. That is more than enough for us to rely upon it. So what we do is we do this twice a month. On the third Friday of the month, which is right here, right? The third Friday of the month, okay? So let's have a look. Where is that? Right here, sorry. So the third Friday of the month, okay? And then we reset it on the first trading day of the month, okay? So what we do is, this was the first trading day of the month here, right? We had the high and the low, all right? Then what we do is we discard that opening range once the third Friday of the month comes around, right? Because that will then be the new opening range, okay? Which is right here and is right there, okay? Now, what this is doing is this is giving us an idea as to where the market is likely to move next, as far as being bullish or in bearish mode, okay? So 62, right? So we can see that the low of the third Friday was 374962, which we have there, and then the high is 3788.73, which we have here. If the SPX, which is the best gauge of the US stock market, is above that upper line, we're in bullish mode, which we are now. If it's below, then we're in bearish mode. If it's in between the two, we're neutral. So right now we're technically in bullish mode. We're above the 21 EMA. Yes, we're bullish, but we're also waiting for a Federal Reserve announcement, and we're in the middle of earnings season. Okay, so earnings season right now, you can see there's 124 companies that will be reporting their earnings before and after the market opens. They never report while the market opens. It's either before or after, depending on where the headquarters is within the United States, because there's all different time zones there, obviously. So, some of the companies like Boeing, for example, okay, that's obviously a rather large company that is going to be reporting their earnings. A lot of other very large companies that will be reporting their earnings as well, along with the Federal Reserve announcement that's coming out. We need to be a bit mindful that this market could have a significant move either way. So what we need to be able to do is, yes, the opening range is very useful. Yes, I like to look at my workspace, which is just a quick snapshot of the overall market. I'm looking to see whether all the major indexes are above the 21 EMA, which is the line in the sand between bullish and bearish on a daily chart. And we can see the transports are starting to break down, while all of the indexes except for the transports are above their 21 EMA. They're looking a little bit tired right here. Yes, we're at all-time highs, but there's a lot of things that could cause this market to move either way. So what we want to be able to do is dig a little deeper here. So one of the things you can look at is the combined put-call ratio. Now, the combined put-call ratio is something that measures market internals. Okay, so these market internals are what sort of allow us to look under the hood, if you like, of the market. And what we do is we use the 10-day moving average here, right, which is this blue line here, which is currently at 0.72, as you can see. Anything that's below 0.75, what does that show? That everyone is bullish. They're long, and comfortably so. This is insanity. There's no one left to buy it. Look for the markets to roll over and start taking out stops. So this particular market internal is showing us that they're very bearish right now. High likelihood of moving down. If we look at the SPX put-call ratio, okay, another market internal, that's showing us here that it's 2.35. Now, between 1.75 and 2.75 is typically neutral. But anything that's 1.75 or less shows excessive call buying. Look for the market to move down. Anything more than 2.75 is showing excessive put buying. Look for the market to bottom and move higher, right? So right now we're probably neutral there, but leaning towards bullish, but we are neutral there on the SPX. Now the skew, which is the perceived risk of a 2 standard deviation move to the downside, in other words, a market crash. What is that telling us right now? The actual reading is 143. Anything more than 135 is bearish. So this is very bearish right now. The perceived risk from the smart money is that there is a high likelihood of a 2 standard deviation move to the downside in the stock market. In other words, a crash, right? So that's something to be mindful of. The trend is definitely something else that you want to look at. Now, right now, this is giving us a reading of 0.75. It would have to be under 0.5 or over 2.0 for me to really look at this. So this one right now is giving me a neutral reading, okay? So, if it was below 0.5, then this is something that you need to be mindful of, because anything under 0.5 is showing you that it's extremely overbought, which means what? A flat to a down day the next day. So this is probably the most accurate overbought, oversold reading in the market, this trend, okay? So if it was under 0.5, keep an eye on that, because if it's below 0.5, you will see a move down the next day in the market. very high likelihood of that happening. Okay, something over 2.0 shows extremely oversold. You'd 90% or more of the time you would see a big move up. So keep an eye on this trend, which is simply at stockcharts.com $trend. You can come to this page. If it gets below 0.5, you will be looking for over a 90% probability that the market will move down. So there are quite a few things here that could see this market move down. A couple of other things that I'm seeing here. But again, we can't fight what's going on with the Federal Reserve, and we've got a new administration now in the United States. Janet Yellen, who has a much better relationship with the Federal Reserve, she's very open to more stimulus. We know that Biden wants to put out there another 1.9 trillion of stimulus. That's obviously going to have a big impact on the market. We also have China threatening to take over Taiwan. That could flare up. There's a whole range of things around the world right now. Second and third waves of coronavirus. Huge amount of companies that are shut down that will never be able to open again. Huge unemployment. We know the deal, right? It's plastered all over the news every day. But there's a whole range of things that can see this market have an incredibly large move up or a very large move down. What I am doing, rather than trying to be one of those experts that believes they know exactly what's going to happen next, yeah, right. What about if you set up a position that actually makes you money if the stock market moves significantly higher, or makes money if the market moves significantly lower? In other words, you're setting up a position that will make money in either scenario. Now, I just did this, not just talk, right? People are good at talking. This is what I actually did, what I actually traded on the QQQ, leading into the end of last year into the first month of this year. We set up that exact position where we're buying a call and a put option strategically at certain deltas at the same time. We made over a 20% return. Okay, we lost money on the puts and made a significant amount of money on the calls. Overall, we made a 20% return on that. I'm expecting this next position that I'm about to set up on the QQQ, I'm expecting it to do a lot better than that. So I'm going to set this up. I'm probably going to take it out to the third Friday in May. So I'm going to take it all the way out to May, and I'm going to set that position up. Now, you can see here on the QQQ, we have an inside day, okay, where this candle here is inside the range of this candle. Sometimes, inside days don't really mean a lot, but then, when you get an inside day like this, that can show a strong reversal. So we've been moving up, strong reversal to move down. So that's definitely one of the things that I'll be looking at. Now, the QQQ, the top holdings within the QQQ are Apple. So let's have a look at Apple. There's an inside day on Apple as well. If we look at Microsoft, not so much, right? Bit of indecision here, right, between the buyers and the sellers here, this price action here. But breaking out of an ascending wedge to the upside, okay. And then Amazon would be the other one there. That's got an inside day there as well on the daily chart. So, if you have a look at all of these things, you would probably, I think it would be a smart move with what's going on in the world to actually have a position that's going to make a lot of money, whether the market explodes to the upside or crashes to the downside. And that's exactly what we are going to do. Myself and my members, we're going to set it up right now. So that's something that I'm looking at right now. I'm going to be keeping a close eye on that. Some of the positions that we've got into just recently, just to try and give you guys some more value here. We recently got into FXI, which is China. We know that China has recovered extremely well from this pandemic, and that things are full steam ahead. There is very strong talk that by 2028, probably before, that China will be the largest economy in the world. They'll be the economic superpower of the world by 2028. A lot of people think it will happen before then. So this is something that is propelling this ETF higher, which tracks China. What we did is we got in here with a 46 strike call on the 11th. Okay, we got on at the 11th of the 1st. Okay, which is right here on this day here. We got in with a 46 in the money call option that expired out to next year, the 21st of the 2nd, 2022. And we bought that for $5.08. It's now worth $8.40. So you can see a very nice move there. We've made a 65% return on that in just 16 days. So we're looking to exit that position now. We're going to exit that position now, but it's certainly one that we may look at again later on, but we're going to exit and take the profit on that one for now. Another one so that one's to the upside. We've done very well on that. Another one that we're looking at here, or not looking at it, we're in this position, is with TTD. Now, this one we're looking for it to break down, to come down to this round number 700, back down to this gap here. This is an interesting one where the CEO recently, president and the CEO of this company, the trade desk, recently sold 100% of all of the shares that he owns in that company, $56 million worth. We also saw another director of the company, another corporate insider, selling 56% or $14 million worth of shares of the company that he works for as well. So, we're looking for this one to move down to 700. Fairly expensive type of stock here, well above $700. So we've set up an out of the money put debit spread on this particular one, and we've got a slight profit with it right now, but we're looking for this to move lower. So this one to the downside, 700. Another one here that we've got is HON. This is one that we're in. We've got in this one on the 15th. Okay, the 15th of the 1st, which is right there. Okay, so we got in here. This one we did just buy options on. We just bought put options on this one. We didn't do a spread on this one. So we bought the 220 strike put option on this one, going out to the 18th of June 2021 expiry. We're up about 12% on this one so far. As it's breaking down, it's looking good. Our stop is the 50. All right. This one too has a gap, and many times you'll see a gap actually being filled. So we're keeping a close eye on this one. This is one that could go lower. The CEO and president recently sold 77% of all the shares that he owns as well. Bit of a head and shoulders pattern going on here as well, which is bearish. Looking for it to move down to fill that gap at 186. It could come down and stop here, because sometimes when stocks come down, they come down to the bottom of the gap here, or if you're looking from the downside, the top of the gap. So we've got our first target here and our second target there, but so far 12% in profit on that one. So some insider selling going on, okay, along with a head and shoulders pattern, along with a gap to fill, as well as, if I just look at this, a squeeze. Now, a squeeze is something that can give you a very big move in the stock. So when the Bollinger Bands are inside the Keltner channels, then they break out, both the upper and lower break out, you typically see a decent size move, a bigger than average move. And this one is starting now to break to the downside. 12-period momentum below 100. You can see here that the the money flow index is certainly moving down as well. So, I like this one to the downside as well, and that's another one that we are in. That's definitely another idea for you anyway, right? Just to try and add some value. MAA is one that we're in to the upside. Okay, we're 11% up with this one. What we did is we entered this one. Let's go back here. We entered this on the 15th. So we entered right here, right? Right here on this day, just to be 100% transparent and tell you exactly what we're doing. This one here is one that we obviously like to the upside. It has a good dividend yield. Everyone's looking for yield right now, trying to get some sort of money for holding investments. And it's got a 3.24% yield on this particular one. And this one, we're looking for it to come up to this 137.54 level. And just because that's a prior, a level of resistance, and it's a prior high here, right? So we've got a prior high here. Our first target is 137.54, as you can see, and then our second target is the next high here of 148.88. So if it does get above 137.54, right, we've got like I say, we've got a 11% profit on this. We bought the 125 call for the 17th of September expiry for $14.05. That's now worth $15.65 per contract. So going along pretty nicely right now. If it does get above 137.54, that will then become our new risk level, which simply means if it goes below that level, which was our first target, we would exit the trade. Okay, so that's how we're going to manage that position. So those couple of trades that we're in right now looking pretty good as we speak. We are in agricultural ETF as well. That's had a nice bounce off the 21, expecting that to move up, or hoping that will move up to 17. Not hoping, but that's the target of the trade. How's that? That sounds better than say hoping. There's no room for hope in trading, but 17 would be our target on that one, and move below the 21, a close below on the daily chart, we'd exit, right? So there's some of the positions that we're in, but right now there's a lot of things concerning me with the market that could certainly see this market have a significant move either way, and we need to be mindful of that. Gold still in a downtrend. I wouldn't get excited about gold unless it does break above this channel line here, right? It hasn't done that yet. Still in the downtrend, sitting right on its 200 SMA. So not a buy for me yet. Maybe later on, but not now. So anyway, they're my views on what's going on right now. I am hedging myself both ways, right? I have some put option positions, some call option positions, and I'm setting up a position that's going to make money whether the market explodes higher or crashes. That's the smart way to do it, rather than be delusional and try and believe that you understand where it's actually going to go. Why don't you use the power of options, the versatility of options, to set up a position that profits from either scenario? Does need a big move, right? Either way, but if it does have a big move, you're going to be making money. All right, my friends, just a quick snapshot there. I hope you enjoyed that. Let me know your feedback. Thank you so much for listening. My name's Allison. All the best, and bye for now.